section, I'm going to be going over Fibonacci. Some of you may know what Fibonacci is or heard about it before. But essentially, it's a mathematical sequence. So as you see here, the series starts at 0, 1, 1, 2, 3, 5, 8, 13, 21, 34. So the next number is found by adding up the two numbers before it. So 0 plus 1 equals 1, 1 plus 1 equals 2, 3 plus 2 equals 5, 5 plus 3 equals 8, 13 plus 8 equals 21, and so on and so on. So when this happens, you actually see that it creates spirals, right? This is the actual spiral that it creates. You'll find this in nature. I have an example here. There's a lot of things, though, when you think of like galaxies and even hurricanes and stuff. See how hurricanes are? It's exactly to a T, Fibonacci sequence. So everything, even your ear, is Fibonacci, right? Snails, the galaxy, bird's head, roses, even eggs. So there's Fibonacci goes way deeper than Forex, is what I'm getting at, you know. So when using Fibonacci retracements in the market, which I'm going to show you here, if you haven't already. Going up here, essentially what you're looking for with a retracement, and the word retracement means to pull back, so to speak. So some people will call this like a pullback or retracement here, right? Because the market's going up, it retraces, and then goes up, right? So in real time, we would want to put a Fibonacci from either the lowest point to the next highest point, or from the highest point to the lowest point, also known as swing high to swing low, or swing low to swing high. Okay, so let's look at this, get a better view. All right, so I'm going to take my Fibonacci retracement tool. It's like this Fib retracement here. So we're looking at this market to continue going up. It's in an uptrend. You know, the trend is your friend. I'm going to say that several times. Trading against it, you're going to lose a lot. So we want to follow the trend. We want to react to pullbacks and retracements. And there's a way that we can actually measure these. So I actually do the wick to wick. So from this bottom to this top here. All right, bottom to top. Swing low to swing high. And then these are the levels. 23%, 38%, 50%, 61%, I believe 74%, 76%, 76.4%, right? There's other levels, but these are the main ones. There's also what are called extensions, which apply that mathematical sequence, but on an extension, right? So I actually have both. I have one below and above. That way, if price decides to move past this point, my target area would be here, right? Now, if price respects these retracements, it bounces off of the 38 or 50, sometimes even the 23, and continuing in an uptrend, my target point is going to be up here. So, fibs have always been my favorite and will continue to be my favorite because it's mathematical, it's science. It plays a part in everyone's daily lives, regardless of whether you know about it or not. This is how the ancient civilizations were able to be super precise with their architecture. So there's a lot to play in it, right? So real time, if I was looking at this, I would want it to either pin maybe to the 50, maybe show a little bit more resistance. Let's get up in here. See, I didn't really make it all the way. So, you know, these could be off by a little bit. Maybe on someone else's chart, it's hitting it perfectly. But that's just how I do it from swing high, swing low. You could do it from this point, which would probably make that more of the 30. Let's go here. Do it from the lowest point. So that's depending on the 30 if you were to go from this low, right? But then again, you can go from this one. So typically what I do is the smaller move from this impulse move. And impulse move means it's shot up, right, very quickly. See out here, it's like indecisive, impulse move down, indecisive, impulse move up. So I normally do the impulse moves, but you could still do it from here. Again, this applies to a lot more than just Forex, right? So what I'm looking for is rebounds off of this area for me to get it, for me to place a good buy, all right? So looking at this candle here, it tells me that it's struggling to close above this line, all right? So I want to wait for the next candle. What's the next candle going to do for me, all right? So push down and then push back up. Once this closes, I'm in for a buy, right? I'll put my stop loss below market structure, you know, below the 50 or 61, depending on how tight my risk is. And you'll see here, boom, boom, respects it. Now, if that candle closed below there, then I would start to be hesitant about my buy, possibly, to see, you know, maybe it is going to continue down more, right? So again, we're reacting, we're not predicting the market, but we know what happens at certain points, you know, once you get, so once it goes here, look at that, that's beautiful, right? It came down, it tested this, it rejected it, and then that's when I would have taken action, right here. I took action, placed my stop loss below where the market has not been recently, right? Because this is going up, it's coming down for retracement. Some people will put their stop here, but that's a little bit too much risk for me. I'm not really trying to be that wrong, honestly, either. If I'm wrong here, chances are it comes all the way down here. I'm really wrong. And I mean, this would give me an opportunity to get back into the market, possibly on a sell if I recognize that was wrong. And price action is going to play a lot in this as well. Price action is actually like reading these candles, which this right here clearly shows that price wanted to go up. I got pulled back down, and then this candle here shows that price wanted to continue down, but it was not successful and closed bullish, right? So a little bit more indecisive here, and then boom, there you go. You got the bulls taking off, right? Very, very bullish, all right? Let's see, and normally once this passes here, I'm looking for it to hit my extension, right? Remember I said I have the extensions here. So I'm looking at a target way up here, all right? And it's probably going to retrace again. You know, market never moves one way all the time. It's either up, down, sideways. So, you know, some people may get a little worried here and pull out of their trade. Typically what I do, once I'm in profit, I will look for additional positions. So I may take like a partial profit here and leave the rest of my trade on. And then I'll wait for a nice pullback like this, and then I'll get back into the market with low risk, you know? Because if this is pulling up, just like I'm expecting it to, because I'm reacting to what the market is telling me, I'm expecting it to continue going up, right? So if I was to get back in here with another entry, now my risk is, you know, essentially here. Or, you know, if I wanted to, I could say around here, because if the market is going up, it's going to go up, pull back some, go up, pull back some, go up. Typically, once it breaks the previous structure, then you might have a reversal on your hand, and it's going to the downside instead of the upside. So if I was to take this, I could possibly take a sniper entry, which would be, you know, somewhat low on this wick here. And I'll tell you how I measure that once I show you this. So that is my 61.8. So I would have had my take profit here. See how it pinned it and it pulled back? I would have took my profit out. I'm waiting for another seller, right? So that's how Fibonacci works. And it's not always to the T, but it's a very, very powerful tool once you get to know to use it. And every pair is different. Like GBP, USD, they like to go down real far into the retracements, like super, super far into retracements. So you'll see those pulling back. You'll see those pulling back further than other ones. So one thing, once you learn, you know, how to mark up charts, how to do technical analysis, the best thing to do is find a couple pairs that you want to stick to, that you like, and learn their traits, learn their personality. You know, I mean, what do they like to do? When they do retrace, do they like to retrace to the 23 to 38 and then continue? Or do they like to pull to the 50, possibly the 61, and then continue? Or are they like some of the pairs that like to stop people out and go back and forth and hit the 76 or more and then continue? You know, so there's a lot of different trades that you'll find with different pairs. But as you can see, it hit my extension perfectly. So you can almost bank on this. Like this, if this thing is going up, you get in on that retracement. You re-enter once you see another retracement, and minimize your risk, of course. 9 times out of 10, it's going to hit that level. You know what I mean? And you know, sometimes you'll see market reversals, and the market will do what it wants. At the end of the day, there's not one set rule where I can tell you, hey, if the market does this, it's going to 100% do this every time. It's just not the case. Otherwise, you know, you figure out those rules and you're an overnight trillionaire. You know what I mean? You're going to win everything. And it's just, that's not how they have it set up. It has a degree of, like a wild card, so to speak. That way no one can predict everything. You could be higher and more accurate, but to say that you could be perfect is just like being a perfect human being. You know what I mean? So let's go ahead and click off of this. And what I meant by that other retracement, so again, we got in here, right? Took partial profits up here. And then I would say to re-enter here. How would I do that? Take my retracement tool. Again, I'm looking at this move and this retracement. I don't want to see the retracement of all this other stuff. So what I'm going to focus on is the next move, right? So from here to here, where I took my trade, where does it pin to, right? It did not close below the 50. Boom. So once I saw it on this candle here and 61, and I seen it closing here, I could have taken my entry probably right around the 50 and said, hey, if it does push down a little bit more, oh well, yeah, I won't get my re-entry. But this would have been a nice sniper move here, getting right back in right after the 50. Or you could have even waited until the 38, like waiting for this to go up, you know, because it's going to pin. It's going to pin on this 23%. It's not going to shoot straight up all the time. So if you wanted to wait and get more confirmation, this would be your confirmation right here. And you're going to learn more about price action. Well, the reason why I'm circling this candle here, this was a bearish engulfing, all right? So whenever you see a candle engulfing the previous one, you know, obviously it has to be a bearish one to a bullish one or a bullish one to a bearish one. Like, you know, you're not going to, like, this doesn't count. It's two of the same, all right? Once you see that, and then it does not continue going, because this is saying, oh, you know, the sellers or the bears have full control of this, right? Completely engulf that. Once you've seen that, this is also a candlestick pattern. I'm expecting a, you know, bullish rally at this point, right? So not only do I have my confirmation with the Fibonacci's, and you know, this pair AU typically is around this, you know, these levels that you'll see that these pins happen, and these moves will happen, and respecting this line, and then boom, you know, it shoots up, and you're in profit, and that's the end goal here. You know what I mean? To be in profit. So by utilizing this, and look, on this smaller move, it comes within pips, within, what's it, 73, within like 6-7 pips, right? 6-7 pips of your of your extension. You know what I mean? So I did a Fibonacci here to find this retracement, to find this entry, and I did another one here once I saw this retracement. Once I saw this coming down like this, I would have pulled this up to here. So let's say the market's looking like this, right? So I'm expecting it to go up. I would have drawn it. I would have seen that's only the 23%. I need more confirmation on that, you know, so I wouldn't have popped in there. Boom. I would go, okay, give me a good pullback, because when the market gives you a good pullback, it gives you good risk to reward, right? You don't want to be buying at the top. You don't want to be selling at the bottom, right? You hear the saying, buy low, sell high. very true for the Forex market. So I want to pull back. Once I know that this thing is trying to shoot up, I want to know, or I want to get back in at a good position. The only way you're going to get good position once it takes off, so you broke this previous higher high, created a new higher high, it's going to have to come back. And generally, it's going to come back around this line here to take out people's stops, stop losses. So once you do that, boom, really shoots through. At that, once you saw that candle like solid, I would have been waiting. Remember I said I wait on the candle time? I would have been waiting to see what that candlestick closed at. If it would have closed there, I wouldn't be looking for a re-entry. You know what I mean? I might be getting stopped out at stop even or whatever for my partial. Okay? That makes sense. Let's go to the next candle. Boom. That right there is showing you that it does one up. So you could have took that. But again, it's when it comes into these Fibonacci levels, it respects them a lot to where it'll pin here, pin there, but then continue. Remember, the market moves in waves, right? So if it's going up, it's going to go like this, it's going to pull back, it's going to go up like this, it's going to pull back. And it's not always equal or anything. This could be, this pullback could be a very small pullback. This one could be a really pullback, almost to what people call a W, right? If it was coming down from here, So the market moves in waves, and that's what we're expecting. We're expecting it to pin off of these, and sometimes when you jump the gun, you can burn yourself. So what I like to do is wait for confirmation, right? Because look, if you would have bought up here, you're in all this drawdown because you got in after these, after this candle, and then you're like, all right, well, it's going up now, and then boom, it shoots down on you, right? So you could always wait for that confirmation because it's going to respect these levels somewhat, and it's not always the same, So sometimes I still, get stopped out even though I'm right. Right. So this one here, if you see all these pins, this means that price could not close. It went up there, but it could not close. So price action is saying that they wanted to come up here, and they closed above it a good bit too, right? What happens next? Shoots right back down because people are buying. The market makers are wanting you to buy, and they're going to drop it real quick. People are going to blow accounts. People are going to lose money and get out. They're like, oh, I was wrong. It's dropping. It's forming an M. It's hitting resistance. Remember, it broke this level. Keep that in mind. It broke that level, right? So even though it comes back down into here, I'm expecting all of these to reject this area. Down, up, down, and then up. All right, making waves depending on how market is setting up. All right. Boom, it's still testing. You can consider this ranging, especially on the 4-hour, and then boom, it creates a new higher high. All right. Boom, boom, to our low. I don't utilize Fibonacci strictly by itself. There's a lot more to it. Having multiple confluences, whether it's with the support resistance, whether it's with your trend lines, and various other strategies. We could even throw an EMA on there. My boy Ryan DeFrays, this is his baby, and I know it's really easy for newbies to understand this. And he likes to use a 50 EMA. Every pair has a different EMA that kind of gives you a confluence on the market as to whether it's a buy or sell. Not to a T. Again, we don't use indicators exclusively for multiple reasons, but let's go ahead and add one. It's really exponential moving average EMA, but for some reason on here it's backwards. And the default one is 9 candles, I believe, or 9 periods, I guess you could say. But if you double click it, you can actually change the settings, or you can go up to here to this little gear wheel and change it. We're going to change this to 50, the 50 EMA. A lot of pairs actually respect the 50 EMA. So you'll see here, you're in a buying market, right? So anytime you see that the candles are above it, you're obviously in a good buy situation, right? So here we're looking for retracements. It's probably going to range. Looks like it forms a nice W here. It pins, and then boom, it crosses this EMA. And you'll see that it pins on the EMA as well. When it's coming back to it, there's a lot of resistance, so to speak. And you'll see that prices, it looked like here, like this almost looked like a really, really good sell because it pinned, and then dropped, right? But it didn't break previous structure. It didn't. It pinned to it, but it didn't break it. It broke this tiny piece, which is, you know, right next to me. But we would have to look to the left to really see if it broke any structure, which it did not. Right? So by using that in confluence with, let's say, we'll do a trend line here. All right? What I would be looking for, I'm going to get rid of this. Oh, no, actually, I'm going to keep that for you. So with this trend line, adding another confluence, we're in a buyer's market. It's going to retrace. I'd want to take my buy above the EMA, above the trend line. So right here, you could have got in with very low risk right here, right? And same thing when you're looking at the retracement. So this is at the end of the move, and again, the EMA is a lagging indicator. But even here, you can see how it pinned to this. It pinned. You're in a buying market. That would be a good buy. Not by itself. Again, you want to have additional confluences. But let's go back to our original fib, which was the lower move, right? Here, if we took this buy, once it created this high, I mean, you might have even thought this, but generally, if it creates a new high, I want it to close, and it barely, and I mean barely closed above that. So I'd want something higher, which breaks that structure. This kind of like sits at that structure. If that makes sense, right? So I'm going to drag this with the wick, like I did before, and boom, I can have an additional confluence saying, hey, the EMA is going to be around the 50 and the 38 around the side, right? So not only do I have the EMA, I have the fib, right? And also, you can do a trend line here. Yeah. Here. All right. So we're looking for a buy here, right? It's a buying market. So we're looking for confirmations as to whether we should get into the market, right? So you could have took a buy here, and then once you saw this trend line here, you're thinking to yourself, well, if it respects this trend line, then I'm wrong. It's going to shoot through the EMA. It's going to shoot through the trend line, or it's going to respect that trend line, shoot through the EMA, shoot through the 50, and reverse on me, and probably hit my other extension, right? I hope I'm not getting too advanced here, but I'm just trying to show you how multiple things can add to your confluences, all right? So we have that. Another thing that is very common in the market is Elliott Waves, which will be covered in the power of 3 as well, because essentially what it is, see here, this 1, 2, 3, 4, 5 move is essentially looking for 3 pushes up, right? So it pushes up, it retraces, pushes up, retraces, pushes up. This is what's called an Elliott wave. I'll have a more advanced breakdown for Fib and Elliott wave confluence, because if you were looking at this from here, all right. So let's say you saw this, you saw the push up, you saw the retracement, and then you saw another push up. There's a lot of confluences that, or a lot of the times that the market likes to move in 3s. And you'll even see like triple taps, 1, 2, 3 drop, 1, 2 drop, so there's a lot of 2 waves and 3 waves. But if you're catching this as a buy, you're expecting it to pull up, and you either want to get out and take partials and then wait on a retracement. So I would have had this drawn up with my expectations as such, right? So I would have been watching the market as this is going on live to see if it's respecting my Elliott wave. If it is, that's another confluence. An Elliott wave means there's 3 pushes up. I already got in on the first push up, took partials, and then and then maybe got in for a second position, because remember I dragged my fib retracement. So if I got in for a second, third position right here, I'm expecting it to complete an Elliott wave, and I'm expecting it to go to my extension. So you're going to see how this all comes together. There's a lot more. Like I said, there's price action. There's a lot underneath. But you know, this is kind of getting you guys into the meat, showing you that I know what the hell I'm talking about. The knowledge is there, and I put in blood, sweat, and tears. But I never conquered myself. That was the true issue. So you guys are helping me with that, and I hope I'm helping you with this knowledge.